90.6% PFE win rate across 104,859 or more verified calls. Merkle-anchored on base L2. Don't trust, verify. That's the foundation behind everything AlgoVault ships, and today's post closes the integration arc that makes that track record meaningful at full scale. If you've been following this series, you know the story. Post 2 introduced the cross-menu concept. AlgoVault's MCP server pulling from Hyperliquid native and Binance institutional flow, producing a composite verdict neither source could generate alone. Post 4 added Bybit's retail derivative signal as a third data source and built confidence ranking into that duality. Post 6 pushed into altcoin breadth territory with OKX, widening asset coverage and sharpening regime detection for long-tail perpetuals. Today Bitget closes the arc. Bitget brings something the other 4 venues don't. A copy trading book and with it the APAC retail behavioral signal. When copy traders pile in or unwind, funding spikes in a characteristic shape that differs from spontaneous retail flow on other platforms. That's not redundant data, it's an entirely different dimension of the information matrix. Hyperliquid is the native venue, lowest latency, regime truth. Binance represents institutional and systematic flow. Bybit captures retail derivatives positioning. OKX adds altcoin breadth that Binance's depth, biased order book underweights. Bitget adds the copy trade behavioral layer. Together, these 5 sources give the composite verdict a full information geometry that no single exchange tool can approximate. The value of cross-venue integration compounds non-linearly. With a single venue, a funding rate anomaly is a data point. With 5 venues, the same anomaly has statistical context. Is this a market-wide stress signal, or an artifact of one exchange's open interest mechanics? Minority descent, one venue diverging from the consensus, carries diagnostic weight that scales with total venue count. AlgoVault's composite tracks divergence explicitly per asset, and the confidence band on the verdict narrows as venue agreement rises. The divergence map in the MCP response surfaces per venue votes directly. When OKX registers whole while the remaining 4 venues agree BU, the minority descent is weighted into the composite, but does not override the majority. The resulting confidence score reflects the degree of venue agreement, and that transparency is part of the on-chain provenance guarantee. Coverage redundancy is the other side of the 5-venue picture. Most major assets now appear on 3 or more venues simultaneously. If one exchange experiences a data outage or rate limit cascade, the composite verdict degrades gracefully. Remaining venues maintain the signal. Single exchange tools fail entirely under these conditions. The MCP layer either widens confidence intervals or downgrades the call to hold rather than silently producing a stale direction. From the installation side, Bitget adds no extra setup step. The AlgoVault seals pack bundles the Bitget funding rate integration alongside the prior 3 external venues. One install command gives you the completed venue stack transparently. Your agent calls get trade signal with a coin and timeframe. The routing layer queries whichever venues are live for the requested asset. The composite verdict lands in your context window already weighted and fused with a divergence map attached. No per-venue integration code required. 3 pitfalls are worth naming. First, Bitget's auth model in the demo contract separation. The Bitget MCP server has no built-in demo flag at the environment variable level, so the integration wraps it with 2 independent guards against accidental mainnet execution. AlgoVault's analytics layer never touches Bitget execution credentials. Only the downstream execution path does. Keep your AlgoVault MCP token and any Bitget execution keys in separate secret stores. Second, symbol mapping. Bitget's copy trading surface exposes instruments that don't map cleanly to the standard perpetual contract naming conventions shared across the other venues. AlgoVault's composite filters these by default. Only UST, margin perpetuals with cross-exchange symbol resolution enter the verdict weighting. If your strategy targets copy trading specific instruments, there's a flag for that, but understand the difference between the primary composite weighting and what you're adding. Third, latency. A 5-venue aggregation carries a higher latency penalty on cold cache misses than a single source call. On cache hits, and AlgoVault caches per venue funding snapshots at a 5-minute or longer decision cadence. The latency delta collapses near 0. Fast strategy users operating on sub-minute decision cadence should confirm their latency tolerance against the cache contract before routing live flow through the cross-venue composite. On the track record, the live number, 90.6% PFE win rate across more than 104,859 verified calls, spans the full production cohort, which now includes assets with active cross-venue composite coverage. The predictive funding edge measures direction correctness within the evaluated timeframe. It is a calibration metric, not a return figure, not a profit and loss claim. When the composite says BU, why with confidence above threshold, how often does price move in the predicted direction? 90.6% of the time. Verify it yourself at algovault.com. Track record before subscribing. Tuesday's post 9, steps back from implementation details and builds the formal cross-venue intelligence mode argument with cohort-level data. What does 5-venue coverage actually buy you compared to a single venue baseline? In measured accuracy, calibration, and regime detection terms, the arc is complete. The foundation is live. Post 9 quantifies the advantage. The free tier gives you 100 free calls per month, and hold are always free. Start at algovault.com docs or try free composite verdicts with no APAC key on the AlgoVault Telegram bot. Verify the track record first, then build.